Hi, everybody. It's Maureen, your local lender with Rate, here with this week's Mortgage Minute. So if you've been watching mortgage rates this week, you once again noticed that they've continued to inch higher. And understandably, many people are asking why, because ironically, the economic data this week has been encouraging. Well, volatility continues to rule the market, and investors are continuing to react more to geopolitical uncertainty than they are to the encouraging economic reports. The biggest story this week was inflation. June's consumer price index came in much cooler than expected. Headline inflation declined 0.4% for the month compared to expectations for just a 0.1% decline, while annual inflation came in at 3.5%. Core inflation, which excludes food and energy, and it's one of the Federal Reserve's preferred inflation gauges, was essentially unchanged for the month, is now running at 2.6% year over year. Normally, softer inflation is good news for mortgage rates, but this is just another reminder that good economic news doesn't always mean lower interest rates. The Producer Price Index report was also encouraging. This measures wholesale inflation, and that also came in below expectations. And what's even better is May's numbers were revised lower. So seeing two favorable inflation reports back to back is certainly a positive sign that inflation continues to move in the right direction. We then heard from both Fed Chair Kevin Warsh and New York Fed President John Williams this week. Their comments suggested inflation continues to improve, the labor market isn't adding significant inflationary pressure, and they don't currently see a strong case for additional Fed rate hikes this year. Now, while the Fed doesn't directly set the mortgage rates, these comments are still encouraging for the long-term outlook on the housing side. So let's look at that National Housing Index, which continued to cool in July after reaching a seasonal high in May. The index declined again this month, reflecting slower buyer activity and some softening in home price direction. Now, while we're not seeing a dramatic slowdown, buyers are experiencing a little less competition than they did earlier this spring, which is creating more opportunities to negotiate and making today's market feel a bit more balanced. And how about this week's Mortgage Bankers Association report? The average 30-year mortgage rate increased to approximately 6.65%, the highest level since last August. So as a result, purchase applications fell 7% from the previous week. So the bottom line this week, guys, while rates moved higher, we're continuing to see signs that inflation is cooling, and if geopolitical tensions begin to settle, those improving inflation numbers could become much more meaningful for mortgage rates in the weeks ahead. And that is this for this week's Mortgage Minute. Thanks for tuning in, and I look forward to seeing you next week.